The price of oil has fallen, and I'm looking at Brent here. It's 103, having been up at about 120 a couple of days ago. And interestingly, gold and silver have shot up. I mean, this is counterintuitive, if you like. Gold and silver should be rising under these circumstances. You know, every time the oil price shoots up and things get worse and worse and worse, gold and silver should be rising. But that's not the way in which portfolio managers in the US and Europe look at it. The way they look at it is, and it's understandable, when you get these risks, you sell everything and get back into cash in your own currency, because that's what you're accounting. If you buy gold, which they don't understand, or silver, then what you're going to do is you're exposing yourself to price risk. We just want to get out of everything. So you can see that this sort of leads us into, if you like, this sort of very, very confusing state of affairs where the West does one thing and Asia does the rest. It's an interesting question because I think it's only in about a week's time or slightly more that President Trump is scheduled to visit China, which I would severely doubt. I severely doubt that's going to happen now. It's an interesting development because until literally last year, China has not reacted to any provocation from America at all. Last year, after April the 2nd, you began to see that President Xi was actually getting a bit more proactive. He went round all the ASEAN nations after Trump's Liberation Day on April the 2nd to reaffirm the free trade ASEAN area for that part of the world and that China was committed to it. We then discovered later on that year, I think around about August, that for the first time ever, the Shanghai Gold Exchange was going to open gold vaults in Hong Kong and Saudi Arabia, where gold could be bought or sold for Chinese yuan and no other currency. I mean, quite obviously setting up a defense mechanism against a collapsing dollar.
What if the biggest threat to the global financial system isn't inflation, but a complete loss of confidence in paper currencies themselves? While oil prices swing wildly and geopolitical tensions explode across the Middle East, something even bigger may be happening behind the scenes. Gold and silver are surging. China is restricting critical exports. Global bond markets are flashing warning signs, and nations are quietly preparing for a world less dependent on the US dollar. In today's video, we break down Alasdair Macleod's alarming warning about silver, global debt, and the growing economic divide between East and West, and why he believes the financial system is entering a dangerous new phase.
Then we had the rare earths episode in September, which actually happened after President Trump threatened 100% extra tariffs on China. So China said, right, no rare earths, end of story. This created a crisis. But what we didn't actually know at the time was that China appears to have taken a similar view on silver, stopping the exporting of silver or severely restricting it, because at that time, America decided that silver was indeed, after all, a critical mineral, and they'd better start accumulating it. So China wasn't going to supply America's stocks of silver, of physical silver. And this led to the liquidity crisis on the LBMA when we saw that lease rates spiked up to around about 40% on October the 9th. So there's a sort of bit of a history developing here. Another thing that happened was that America took over, assumed ownership, took control of the Panama Canal, the port facilities at both ends of the Panama Canal, which were owned by a Hong Kong company, obviously within the Chinese sphere of influence. Now that's led to something new. China has now banned any American ship from its ports, and its ports are not just in China, they're all around the world. So this is definitely hotting up. Then on the purely financial side, we saw that China turned around and advised its private sector holders, pension funds, insurance companies, whatever, that they should reduce their exposure to US Treasury debt. That was a few months back. That, I think, important point about that is that not only does it tell us that there's going to be no further purchases, if you like, from that quarter. I don't think we're talking about very much because most, as I understand it, most of the outstanding US Treasury debt is actually owned by or through the People's Bank of China. But it's sending a signal to everybody within the Chinese and Russia's sphere of influence not to buy US Treasury debt and indeed at the margin sell it. So this is leading, if you like, to a debt crisis for the US Treasury. Really, when we consider the consequences of America's attacks on Iran in conjunction with Israel, and when we actually cut through the propaganda, disregard the Western propaganda on this topic, and realize that the Iranians are actually winning this war, and the Americans just can't get out of it because they can't abandon Israel, this is creating a huge crisis. Supply of oil, supply of derivatives such as things like helium, and particularly phosphates, fertilizers, which incidentally at the same time China's turned around and said we're not exporting phosphates either because we need it for our own agriculture given the shortage, global shortage. So this is making the shortage for everyone else considerably worse. I mean, there is a great crisis, if you like, supply crisis, which will drive the West either into a slump or into hyperinflation or some combination of the two. That is the outlook. And President Trump is suffering in the polls in America ahead of the midterms. I mean, for him, this is a complete disaster. I understand that President Putin has turned around and actually had a call, initiated a call with President Trump, telling him, do not escalate this Iranian situation because of the disaster that it's going to lead to. It could spread considerably beyond there. And the Iranians undoubtedly are in control of the situation. I mean, today we had Rubio backing off on behalf of the US government. The price of oil has fallen, and I'm looking at Brent here. It's 103, having been up at about 120 a couple of days ago. And interestingly, gold and silver have shot up. I mean, this is counterintuitive, if you like. Gold and silver should be rising under these circumstances. When every time the oil price shoots up and things get worse and worse and worse, gold and silver should be rising. But that's not the way in which portfolio managers in the US and Europe look at it. The way they look at it is, and it's understandable, when you get these risks, you sell everything and get back into cash in your own currency, because that's what you're accounting. If you buy gold, which they don't understand, or silver, then what you're going to do is you're exposing yourself to price risk. We just want to get out of everything. So you can see that this sort of leads us into, if you like, this sort of very, very confusing state of affairs where the West does one thing and Asia does the rest.
Alasdair Macleod argues that the recent surge in gold and silver prices is exposing a major shift in global finance. Normally, when oil prices fall, precious metals would weaken. But this time, gold and silver are rising even as energy prices pull back, signaling deeper fears inside the financial system. According to Macleod, Western investors and Asian investors now see risk completely differently. In the West, portfolio managers rush into cash during crises because they believe assets are risky. But in countries like China and India, investors increasingly see fiat currencies themselves as the real danger. That difference is driving a massive long-term flow of physical gold and silver from Western markets into Asia. One of the biggest developments he highlights is China's expansion of the Shanghai Gold Exchange. China has reportedly opened gold vaults in Hong Kong and Saudi Arabia that settle trades directly in Chinese yuan instead of dollars. At the same time, China allegedly restricted exports of silver and rare earth minerals after the U.S. labeled silver a strategic resource. Macleod says these actions help trigger stress in global bullion markets, including liquidity problems inside London's precious metals system. Silver lease rates reportedly spiked dramatically as physical supply tightened. But the concerns go far beyond metals. He warns that sovereign debt markets are beginning to crack. Bond yields across major economies, including Japan, Germany, France, and Britain, are climbing rapidly as investors question whether governments can sustain exploding debt levels. At the same time, geopolitical tensions involving the US, China, Iran, and Russia are escalating pressure on global trade routes, oil supplies, fertilizers, and industrial commodities. China is stockpiling strategic resources while limiting exports, and Macleod believes the West could face a dangerous combination of inflation, stagnation, and rising political instability. His overall message is clear. The global financial order built around cheap debt and dollar dominance is under growing strain, and precious metals may be signaling that a major economic realignment is already underway.
I mean, we over here, our portfolio managers just look at risk from the point of view of currencies. They think the risk is in assets, not in cash. Whereas China, India, and all the rest of them, the Asians, see the debasement of the currency being the risk. So, and this has been informing the flow of physical metal out of Western capital markets into Asia for the last two decades at least. So, anyway, it's all coming to a head, I think, with debt crises. We've got. I mean, if you look at the way in which bond yields across the G7 are performing, going into new high ground, we have, and I'm not talking about ultra longs, I'm just talking about 10 years. Going into new high ground, we have JGB's yen bonds. We have German 10 years. We have France's 10 years. We have British 10 years. The only ones not quite there yet are Canada, Italy, and the US. But they're going there. And particularly if you look at the 30 years, which, of course, the Treasury said, oh, we never funded that long anymore, sort of thing. In other words, they can't. That's already leading into new high ground. So yeah, we've got a global bond crisis, and that's bound to change everything for portfolios in the West. But I can't see what he has got. I mean, everything he has done has been destructive of American interests. And I think, if the meeting does go ahead, I suspect that, the agenda will obviously be Iran. But his problem is that, as I said earlier, he can't back out of Iran because he cannot abandon Israel. If he did abandon Israel, I mean, it would be probably curtains for Israel, in a sense. I mean, they pushed themselves into a position where the only allies they have in the region are allies of convenience. And once America backs out, I mean, I think even the UAE will, modify its policies. Egypt will modify its policies, and Saudi Arabia, which has basically been sitting on the fence, I think it will modify its policies. So, absent America, you're going to get, Israel is going to find that it's just surrounded by enemies, and very angry ones too, particularly in the case of Iran. So, he can't back out, and I think this is the topic which will particularly concern the Chinese. They will want to de-escalate this very, very seriously. They don't want Iran to fall. They know that Iran won't fall. They know that America is going to lose this. I think what they would rather do is to somehow persuade the American administration to back off without losing too much face. How on earth that would happen, I don't know. I don't think we see any overt action out of China on this. It's not their style at all. I mean, they've only really done things recently out of severe provocation and having no alternative but to appear to do something. And they haven't really had to do that from the point of view of their own domestic electorate, if I can put it that way. They don't play politics on this. They're playing practicalities. And of course, President Trump is, having sort of started off with a rather bombastic approach to everything, he's now faced with, real political problems. And I can't see how China can give him a way out, if you like. I may be wrong. I hope I'm wrong. Even under Biden, they started reducing the strategic reserves. And that is something which has continued. And I think the only reason that in Western markets, oil is where it is, while in Asian markets, it's up to double where it is in terms of, real cost on the ground, is that America has been prepared to draw down, if you like, on its reserves and supply Europe in particular. You've got this local market. I mean, oil is not a fungible thing. This is the problem. You can't do an arbitrage with it because you can't really deliver it. You need to have the storage and all the rest of it. And in any event, oil is always different from the theoretical contract of, say, WTI or Brent. That is something which is coming to an end. And I suspect that you'll find that very, very shortly, what in America they call gas prices will really start rising. And they'll also start rising again in Europe. Yeah, I think that's right. I think the two things to say here. The first is that the Chinese have over 1 billion barrels in reserve. They've already protected themselves to a large degree against this sort of thing. The other thing is that Iranian oil is getting out. And the way it's getting out, basically, is that Iranian ships, by keeping within 50 miles of the coastline, can get past all the American blockades, because the Americans don't come closer than 200 miles to the Iranian coast, because they know that they will be attacked by missiles and drones. So, I mean, quite a lot of the shipping is getting through as is. And I think this is leading to talk about, the Americans' next attempt will be to blockade the Straits of Malacca, which is certainly a huge, great concern. And this is why I think we've had the escalation of concerns over Panama, and the Chinese actually saying, right, anyone not taking Iranian oil, if it is offered, where Chinese law applies, we are effectively countermanding the new US regulations banning anybody from taking Iranian oil. We're making not taking that oil illegal. In other words, there's now this sort of conflict in terms of legality. The situation is actually escalating on this international scale, partly because the Americans, I think, have got to the point where they're really forcing the Chinese to react. And of course, the other beneficiaries from this are Russia. I mean, they're doing quite well out of it. And sanctions have been lifted by the Americans on Russian oil to try and ease the situation. And then you've got the financial side with Besant, sort of cracking down on banks which, take payments in yuan or whatever. I mean, this is just getting absolutely crazy. I mean, the Americans, basically, everything they do backfires on them. And that is the point the underlying point that we need to understand.
Whether you agree with Alasdair Macleod or not, one thing is becoming impossible to ignore. The world economy is changing fast. Rising debt, geopolitical conflict, central bank gold buying, and growing distrust in fiat currencies are all reshaping global markets in real time. And if physical gold and silver continue flowing from west to east, the next few years could look very different from the financial system investors have relied on for decades. If you enjoyed this breakdown, make sure to like the video, subscribe, and turn on notifications for more updates on gold, silver, geopolitics, and the global economy. Thanks for watching, and we'll see you in the next one.